Trillion-dollar stablecoins. Hey everyone, it's Wolfgang. So stablecoins are used in crypto, in the crypto world. Stablecoins are tied, normally they're tied to fiat currency. There are stablecoins in the U.S. One of them is Tether. That's the market leader. U.S. dollar Tether, USDT. It's tied 1-to-1. It's pegged to the U.S. dollar. And stablecoins facilitate transfers of funds between participants, including institutions like financial institutions will use stablecoins like Tether for settlement, to settle financial transactions. Okay, so stablecoins are used for payments and financial transaction settlement. Those are the current popular uses. That's not all the use cases, but those are the two popular use cases. As an example, if you're transferring funds across a country border, there are usually fees imposed on that transaction, and some of those fees can be high. And so with stablecoins, you avoid the fees, so it lowers the cost of transferring funds across country borders. That's another situation. Used for payments, used for transferring to avoid fees, used for settlements. Okay, so there's $135 billion in total daily volume right now in the U.S. In stablecoin transactions. That's not only the Tether stablecoin. That's kind of like all the stablecoins. There's several of them. Tether USDT is the biggest one, biggest market share. But there's $135 billion of total daily. That's daily volume. So that's a lot of money in stablecoins being transacted on a daily basis. That's a heck of a lot of stablecoins being transacted. You can sort of think of a stablecoin as like a digital version of the U.S. dollar. In the case of Tether, anyways, Tether is tied 1-to-1 to the U.S. dollar. Okay. So the total daily volume of all stablecoins, that's the transaction volume per day of all the different stablecoins, Tether and other ones, is $135 billion. The total market cap of US dollar Tether is $155 billion. So 155 billion of total USDT value exists right now, anyways. So by comparison, in the EU zone, Europe, the stablecoin market cap total, it's much less than the U.S. stablecoin market. In the EU zone, the total market cap is $486 million. That's a lot of money, but when you compare it to the stablecoin market in the U.S., which is 260 billion, so you can see that Europe is pretty far behind in finance tech. Europe. Their governments impose so many regulations and taxes on their population that the innovation in Europe always sucks compared to the U.S. That's the straight truth. The Europeans, sometimes they act with envy about the innovation that goes on in the U.S., and so they try to put up legal and regulatory barriers. They're doing that right now with Tether, with the Tether stablecoin in the U.S. The EU zone is, and you can read about this online, just you can search on EU zone blocking Tether or hindering Tether. There's stories about this. So the EU zone is pretty far behind in finance tech, quite a bit behind the US stablecoin market. 260 billion in the US. Stablecoins have not been around that long. Only 486 million in Europe. So Europe is kind of the poster child for bad government policy and over taxation. They try to control too much of people's lives and people's activities. In the U.S., the reason we have this huge stablecoin market is because the U.S. has been the home of innovation and the home of hands off the citizens. Right? Let's leave people alone and let them pursue their interests. So. Finance tech in the U.S. Sort of blows Europe out of the water. The EU zone is actively trying to block the Tether stablecoin. They have their own stablecoin. The number one stablecoin in Europe is, I believe, EURC is the top stablecoin in Europe, and it's not too big. It's not a big element, at least compared to the U.S. market. Okay, so let's talk about the projections for the future growth of stablecoins. And again, stablecoins are used for payments, for financial transaction settlements, and to avoid high fees when funds are transferred across borders, when they migrate across borders. So, and JP Morgan and Standard Chartered have made predictions about the growth in the use of stablecoins. JP Morgan, 500 billion by the end of 2028. So in 3 years, JP Morgan predicts 500 billion in market cap total for stablecoins. Standard Chartered is more optimistic. They project $2 trillion of stablecoins market cap in the next 3 years. So that's a pretty big variance. That's a pretty big gap between the expectations. So why is that? Why is JP Morgan so relatively speaking, sort of pessimistic? Because if you think about it, the U.S. stablecoin market is 260 billion now in 2025. And JP Morgan is expecting it will not even double in the next 3 years, whereas Standard Chartered is expecting it to grow eightfold over the same time period. So doubling eightfold, right? So that's a big difference in the expected growth of stablecoins. If you think about the financial institutions in the U.S., they're massive institutions. Blackstone, JP Morgan Chase, Bank of America. There are huge financial institutions all over the country, mainly in New York and in Florida right now. But you would think that the growth of stablecoins would be much faster than this. I mean, only a doubling in the next 3 years. It seems sort of pessimistic. So why is there a big difference in the market cap predictions? The biggest reason is, for now anyways, the rate of stablecoin adoption is, slow, relatively slow. Because the daily volume of Tether, now remember, I said the daily volume of, daily volume of Tether and other stablecoins is 135 billion right now in the US, but Tether is, only 80 billion of that. So the number one stablecoin in the US dollar Tether, USDT, is $80 billion daily volume. And if you compare that to the stock market trades about 700 billion per day. And the bond market in the U.S. trades $1.5 trillion per day versus a measly 80 billion for Tether. So the adoption rate in JP Morgan's expectations, the adoption rate is not happening as quickly as a lot of people thought. But that's a snapshot of today. Something has recently changed, and I'm going to talk about that in a couple seconds here, that I think will speed up adoption of stablecoins. Okay, so USDT adoption could speed up and sort of blow JP Morgan out of the water. I think this is going to be, looking back in 2028, JP Morgan is going to say, we blew it. We got that way wrong. Because the Genius Act was passed last month. It was, the Genius Act was presented in February of 2025. It was just passed last month, I think the middle of the month, the 15th, 16th or 17th of June. The Genius Act passed. It imposes regulations on stablecoins. And so some people in crypto hate regulations, okay? Because the whole point of crypto was to keep it out of the mainstream, keep it out of the hands of, out of the reach of governments. So it's a freer way to transfer value, transfer money, funds between people. We don't like regulations. But the good thing about regulations, it legitimizes stablecoins. The Genius Act passed last month. It will legitimize stablecoins. And what will happen is more institutions will point to the Genius Act passed last month and say, that validates the use of stablecoins. The government passed this, or at least it was passed in the Senate. And so I suspect more U.S. institutions will start using stablecoins because the regulations are being it's being regulated, basically, more than it has been in the past. So the regulations that are in the Genius Act include a framework for issuance of new stablecoins. So up until this point, anyone could issue a stablecoin. There were no regulations. Now you have to get a special certification to be able to issue a stablecoin. So if you think about that, it's like if you want to be a doctor, in times past, you could just learn on your own how to be a doctor and become a doctor. There was no licensing. And then licensing became common. And now you can only be a doctor after you meet certain thresholds, certain intellectual and educational thresholds, standards, basically. So you can no longer issue. You can't just issue a stablecoin because you wake up one day and you want to issue a new stablecoin. You're now going to have to meet certain thresholds of certain requirements of the Genius Act So what will that do? That will limit new entrants, new stablecoins in the U.S. stablecoin market. Okay, that's going to reduce competition for Tether and all the existing stablecoins. So this is sort of a story about getting in on the ground floor of something new, because when you do that, you get in before all the regulations come. So if you see something new in technology and it's controversial, but it stays popular, it has a running popularity that's increasing. That has happened in the crypto world. The sooner you jump in, the better, because at some point regulations will be passed. Because the more something is adopted, the more government is concerned about its job, which is to protect citizens. So the Genius Act legitimizes stablecoins by imposing regulations, by limiting issuance of new stablecoins, and setting out guidelines for oversight of the stablecoin market. So that you can just tell, okay, so now they're legitimizing stablecoins. More institutions will jump in harder and start finding use cases for stablecoins. I think JP Morgan in 2028 will look back at this and say, we were too pessimistic. I think stablecoins are going to take off. So US dollar Tether, USDT, has a 65% market share in the US, right around 65%. And that could increase with the Genius Act, because Tether, as the recognized leader, whenever there's like a first mover, there's the first mover advantage. Whoever is biggest in the marketplace usually ends up taking most of it. As an example, Microsoft operating systems. When Microsoft got started in operating systems, because they didn't do operating systems, that wasn't their whole business. They had other products. But as soon as they started emphasizing the operating system, particularly Windows, a competitor to the Apple Mac, eventually Microsoft captured the majority of the operating system market. There is Android, right? But Android works on mobile devices. There's the Apple computer that has its own operating system, but that's a relatively smaller market. That particular operating system does not have as many users as Microsoft's operating systems. So getting in before the regulations are passed in tech is a good thing. If you see something new in tech, step one, and you see it's growing, even though there might be controversy, step two, that is the time to jump in, because eventually you will be blocked. The issuance of new stablecoins, if the Genius Act becomes enforced, right, it's going to limit new entrants, new stablecoins in the market. So I think Tether is eventually going to take the vast majority of the stablecoin market, because people tend to be lazy too. They don't want to have a lot of different bells and whistles if they all do the same thing, which is payments, financial transactions, settlement, and avoiding high fees, transferring funds across borders. The fewer choices you have to make during your day, the better you feel. If you're always spending your brain power having to make choices throughout your day, you will become tired. And so that's generally true for humans. The more you use your brain during the day, because we're biological, we run out of juice. We have to sleep, right? We sleep 8 hours. So I think Tether will eventually take like 85, 90%, maybe more of the market. And this was just passed last month. So if they start enforcing this, this is probably a good time to start thinking about the stablecoin market, because it's still sort of ground floor, right? Because the Genius Act, I don't believe they're enforcing it, at least not totally, not yet, because it was just passed a few days ago. So that's kind of the background of stablecoins. $1 trillion stablecoins, we're not quite there with daily volume, but let's see here. Standard Chartered, as I said, they expect the total market cap of the stablecoin market in the U.S. will be $2 trillion by 2028. So this is definitely possible. Is it likely? I don't know. Not sure yet, because right now the rate of adoption is kind of slow. We think the Genius Act is going to speed things up, but that's a story that has not played out yet. So that's kind of where things are with them. There were a couple things I couldn't fit on the board. One of the issues, and it's only fair to bring this up because I've mentioned Tether, USDT, predominantly throughout the video here. So there has been an issue, a past issue with Tether. That's fireworks going off. It's July 3rd, so people are practicing their fireworks that they just bought or something. Sorry about the background noise there. But so there have been questions in the past about the nature and the composition of the reserves that are the backing for Tether, okay? So, and sometimes it's become quite controversial and challenging for the founders of Tether, because outsiders will point to their reserves that are supposed to back Tether. Because what if there was like a bank run on Tether? There have to be the reserves there. You know, the FDIC was invented because of bank runs. The FDIC is a government entity that tells users of banks, if there's a run on the bank, don't worry, we've got you covered, right? So the concern with Tether is, as it starts to become more and more used like a traditional fiat currency for payments, settlements, and transferring funds across borders, then people started raising questions. What if there is a bank run on Tether? What about those reserves? What do they look like? So that has been a little bit controversial. So right now, the backing of Tether is 100 billion in U.S. Treasury bonds, 82,000 Bitcoins, 48 metric tons of gold, and secured loans and other investments. So right now the critics are looking at that, the composition there of the reserves that Tether holds in institutions. Critics have said there are volatile assets like Bitcoin and gold, and the value of the secured loans and other investments hard to pin down. So there is still some controversy about Tether and its reserves, because if there was a bank run on Tether, there have to be enough reserves to cover everyone, or else that size of a market collapse could be quite dangerous to the economy. So critics are saying that only about 28% of Tether's value is backed by cash or cash equivalents, with the remainder in riskier or less liquid assets, increasing the vulnerability to a market downturn or a bank run on the stablecoin. So it's something to keep in mind. If you have any questions about this, please post questions in the comments. I really want to thank everyone for watching. Have a great day.